The key is you choose gold as your collateral. And the key is China is accepting gold as collateral. And that's why the West needs to accept gold as collateral if they do this. I'm not saying they will definitely do it, but this is the path they must be on. I believe that because they explicitly stated we're setting up the vaults for project finance so people can monetize their gold and they can get their infrastructure and their economies modernized. Now, it may or may not be wise to invite China to build your infrastructure, but the choice is yours, not Washington's.
What the system is really designed to do is mask the real decline in this stuff. And that means that you need a strategy that works outside of the system, not inside the system. That's just hopium.
China and partners among the BRICS nations are building a system to mirror Western finance. China's gold reserves have historically represented a relatively modest percentage of its total foreign exchange holdings, around 3.4% as of late 2023, suggesting significant room for continued expansion compared to Western central banks, where gold market performance often constitutes 10 to 30% of reserves. The U.S. freezing of Russia's reserves was a wake-up call for the world, as the dollar is a weapon. In response, BRICS are building a physical gold vault network to fund their own future with unfreezable wealth. Seasoned market experts Vince Lanci and Lynette Zang declare gold as a monetary asset while discussing BRICS and their de-dollarization plans this year. Legendary commodities trader Vince Lanci warns that China is preparing its next golden move. By using gold as a high-quality liquid asset, Beijing is building a new financial system that bypasses Washington. The goal is to fund infrastructure by pledging gold as collateral for loans, finally replacing US Treasuries. According to a report by Reuters, foreign holdings of US Treasuries have declined by 12% since 2020, with China's role in this trend underscoring its pivot toward a multipolar currency system. According to Vince Lanci, the BRICS are developing a financial system in which gold, rather than a national currency, serves as collateral. He warns that unless the West modernizes its gold markets, it risks losing influence as the BRICS offer a new path. Should a U.S. president invoke the Gold Reserve Act, a global revaluation of gold would benefit all over-indebted nations holding significant reserves. Meanwhile, a severe bond crisis is unfolding not only in the U.S., but also in Japan, the U.K., and France. Signs suggest the global monetary and financial system is nearing a breaking point. Before we dive into Vince Lanci and Lynette Zang's sharp insights from their latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
On Saturday, after slaving over a hot keyboard, we put out a post called Exclusive China's Next Golden Move Beyond Basel III. Now, I'm just going to read the introductory paragraph before we get into what matters, right? The document presents two complementary pieces. The first is an essay outlining our research and conclusions. The second is a supporting academic PDF at bottom for readers seeking a more formal treatment. Both focus on the evolving role of gold in global finance. Our central finding is that China intends to move gold from its Tier 1 status in Basel III, they rejected it as HQLA, toward recognition of it as a high-quality liquid asset, at least in the BRICS countries, unlocking its use in repo markets and trade finance. Such a change would allow gold to substitute for US Treasuries as collateral within the BRICS system. Now, I think it's important, if you're a Westerner and you're not familiar with this, why it's such a big deal. So let's look at the real reason many BRICS countries are shifting away from US Treasuries and towards gold, and why we feel ultimately that gold must be put to work as an HQLA in repo form. The turning point was 2022. When the United States and its allies froze Russia's assets. The world saw the dollar's weakness laid bare, its vulnerability, I should say. It wasn't inflation or deficits or even debt. It was counterparty risk. Washington could unilaterally weaponize the dollar system, SWIFT included, freezing or confiscating wealth that nations had assumed was safe. And that's been our focus as Westerners. That's why gold's going up. We don't trust the US anymore. Let's get a little more practical here. Imagine you're a smaller BRICS country, an African nation, for example. If the US can do that to Russia, a nuclear power, what could it do to you, you ask yourself? And you know the answer, because you've already seen sanctions used against Iran. So you ask yourself, where can I put my wealth that cannot be frozen or stolen? And the answer is gold, but there's more. Gold matters not just because it's immune to confiscation, but because it enables development. That's where the BRICS gold vault system comes in. Anyone who's long gold, like this small African country, seeks to leverage gold's buying power for in-country development. Okay, the vault system comes in like this. The BRICS are building and linking vaults across member states, from Saudi Arabia to Hong Kong, and eventually in Africa itself. The system allows you, as a nation, to hold your gold locally, or at least geographically diversified, while centralizing the accounting and diversifying the counterparty risk. Here's why it matters. This is why they're doing it. As a resource-rich but infrastructure-poor country, you want to modernize. They've been wanting to modernize for years, more or less. You want highways, you want airports, you want refineries. Under the BRICS plan, eventually, if they get it right, you can pledge your gold into a vault. We catalog this in May. Use it as collateral and borrow against it, often in yuan, to pay for those projects. So I need a highway built. I go to another country. I don't have dollars. I have gold. Okay, where's the gold? It's in the vault. We'll blockchain the gold in the vault. Okay, now we'll convert the gold into, we'll give you a yuan loan against it, and then we will start building your highway or your airport or wherever it is. The collateral's there. I'm comfortable as the African nation because the collateral is not going to be confiscated. The U.S. is out of the loop. And they're comfortable because they have accounting procedures blockchaining the gold as well. Now consider the alternative, or what they're doing now. If you pledge US Treasuries for your infrastructure, Washington remains in the loop. The US could pressure you, block you, or threaten to cut you off. And with gold, that leverage disappears. For the United States, this is a loss of influence. But for smaller countries, whether it's well-founded or not, it creates a neutral ground bias towards China because you're using their currency, but you're not using their currency as a store of value. It's not the collateral. It may or may not be wise to invite China to build your infrastructure, but you could have the West do it too. You can use your gold and collateralize it and have an American company come in or a European company. The key is you choose gold as your collateral. And the key is China is accepting gold as collateral. And that's why the West needs to accept gold as collateral if they do this. I'm not saying they will definitely do it, but this is the path they must be on. I believe that because they explicitly stated we're setting up the vaults for project finance so people can monetize their gold and they can get their infrastructure and their economies modernized. Now, it may or may not be wise to invite China to build your infrastructure, but the choice is yours, not Washington's. At the end of the day, this comes down to trust. None of the BRICS countries trust the US, not to do to them what was done to Russia. They don't trust China either. And until that fear is gone, they cannot modernize through the dollar system. That's part of the global reserve currency suppressing economies, in their opinion. I can make the case for the US infinitely well as well. But this is where the West is ignorant. We need to make sure people understand their case before addressing it. And we believe that's why China is working to make gold a high-quality liquid asset so it can back international repo markets and fund BRICS development projects. And that's why, ultimately, if the West hopes to compete in developing those countries, just as it developed Japan and Germany and Taiwan. And they say, we're going to use gold now. Well, we have to accept gold as collateral, and our own gold markets have to be modernized. Thank you. That full analysis is in the exclusive China's Next Golden Move Beyond Basel.
When politically driven inflation becomes embedded in expectations and policy frameworks, gold, as a finite real asset, becomes increasingly valuable as a store of value. Currencies face persistent debasement through deliberate policy choices. Could this political shift hint at something more fundamental? The gradual weakening of the post-1971 fiat currency system that has relied on central bank credibility rather than gold backing for monetary stability. Technical economist Lynette Zang warns that the U.S. financial system is broken, with the middle class disappearing and CPI-based policies masking real inflation. She stresses that delinquencies on credit cards are now at crisis levels across all income groups, showing widespread fragility. Concurrently, she argues that stablecoins will only accelerate hyperinflation and expose the collapse more clearly. The only real defense is holding sound money, such as gold and silver. She concludes that survival requires strategies outside the failing fiat system. From the agony of the Great Depression, the battlefields of World War II, and financial convulsions in Asia and the West, through to pandemics and wars, history proves that gold shines brightest when everything else dims. Let's get back to the interview.
Simply put, the math doesn't work. The system is broken, and we are at the end of this experiment. Federal policy and federal poverty guidelines focus on hunger prevention, but true financial well-being requires far more. LISEP finds these benchmarks vastly underestimate need. No kidding. And CPI-based policies and benefits fail to reflect the basic needs inflation, leaving low and moderate income families falling further behind. There really is no more middle class, and that poverty is growing. Unfortunately, during these transitions, most people end up in abject poverty. But here's the truth. Having a sound money foundation and a local community around you, that can protect a reasonable standard of living. And that's what we have to be prepared for, because the change has already been put in place. And so what do you need to do? Make sure that you have surety in food, water, energy, security, barterability, wealth preservation, community, and shelter. You bring to the table what gifts that you have, whether that's skills or a garden or learning, being willing to participate, because there is power in numbers. And these things aren't luxuries, they are essential. A growing share of U.S. adults say that their personal finances will be worse next year. That reflects growing public discontent and ultimately that loss of confidence that I keep paying attention to. Because once it breaks below that level of confidence, the lowest level that it's been ever, it's game over. And everything has been put in place, because about 1 in 4 adults say that they've experienced each of the following in the past year: trouble with medical care, problems paying rent or the mortgage, trouble paying for child care, gotten food from a food bank, or used those 4 easy payments to pay for food, except you need food every day. You need that. This isn't just about poverty. It's about fragility. How fragile are you? Can you see the importance of a sound money strategy? Can you see the importance of gathering your local community around you? Can you see the importance of getting sound money back in the system again so they can't do this to you? I can't say that we deserve what we get, because quite honestly, I don't think anybody deserves it. But you can see the writing on the wall. Credit card delinquencies now rival those in 2008 crisis levels. despite a stronger labor market. And how much have incomes gone up since then, but not at the rate of inflation? Never. And that's by design. Since Q2 2021, delinquencies have surged over 40% against key regions. Even the highest income zip codes are showing those signs of distress. And Fed data going back to 99 shows delinquencies 30 and 90 days late. Well, they have surged across all regions and across all income levels. The highest income zip codes saw a 73% jump in 30-day delinquency rates. Now, the pace may have slowed a little bit, but the distress is widespread and growing. Delinquencies among upper-income Americans have jumped nearly 20% in the last 2 years. High interest rates and the end of student loan forbearance? Well, guess what? That's what's driving this stress. And also all of this money printing, reducing the value of all of the money that's already out there. And now the economists are warning, this rising debt burden makes the economy more vulnerable to future shocks. And we've got a new shock that is being set up in the form of stable coins. So if you haven't yet watched any of the videos that I've done on it, there's got to be more, because there is not one doubt in my mind. I'm putting my neck on the line. I'm getting chills. I know that this is true. The stable coins will definitely be ushering in the hyperinflation, making that a whole lot more visible. So what's the anchor in all this chaos? Gold, silver. Gold's demand spans jewelry, technology, central banks, investors, space travel, food, every single sector. And each sector rises at different phases of the economic cycle. This is diversity, and it creates a self-balancing market, because if demand drops over here, it expands over there, and it reinforces gold's resilience as a long-term investment. So you know what that feeling is when everything feels uncertain, confusing, frankly, even scary. But then you've made the right choice to protect yourself. You've laid in your sound money strategy. You've gathered community around you, and you're participating in getting sound money, redeemable gold back in the system again. That's the power of sound money and community. Most people think that they're doing fine because they're not officially poor, and you kind of figure out how to juggle things to make those ends meet. What the system is really designed to do is mask the real decline in this stuff. And that means that you need a strategy that works outside of the system, not inside the system. That's just hopium.
Morgan Stanley reports that the dollar's value has tumbled roughly 11% in the first half of 2025, the steepest drop in more than 5 decades, marking the end of a 15-year bull cycle. The investment bank predicts further erosion in the year ahead. For now, America's currency remains the world's standard. But as Beijing's gold reserves grow, the contest over who controls the future of global finance has only just begun. Will the West adapt and modernize its financial system around sound money, or will it watch from the sidelines as the balance of power shifts toward gold and the BRICS? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.